So, Corey Nolan, Sayona Mining.
Good afternoon, ladies and gentlemen. Welcome to this presentation. I'm the CEO of... this is not working. Here we go. Which way do you push this? Oh, okay. Sorry, I'll start on. Good afternoon, ladies and gentlemen. My name is Corey Nolan. I'm the Chief Executive Officer of Sayona Mining. Sayona Mining is developing an advanced lithium project in Canada, which is the primary focus of my presentation today. So Sayona is an ASX-listed company. Our primary objective is to fast-track the Ortier lithium project in Quebec into production as quickly as possible. It's a two-stage project. The first stage of production will be selling concentrates, and then we'll be looking to convert those concentrates into lithium carbonate and lithium hydroxide through a downstream facility, which will probably be about 3 or 4 years after the first concentrates are sold. The company also has a significant package of exploration properties in Australia, about 2,000 square kilometres in the world-class Pilgangoora district as well, and we have a team on the ground exploring for lithium pegmatites there as well. Just very quickly on the corporate structure, effective today we have 1.69 billion shares in issue. We've just completed a private placement of $11 million, giving the company just over $12 million in cash resources and a market capitalisation of about $88 million. We were also about to complete an underwritten rights issue. So at the end of the rights issue offering, we'll have around $15 million in the bank. The board of Sayona has a lot of lithium expertise and experience. 3 of the directors of Sayona Mining are also directors of Altura Mining. Altura is a 700 million market cap company, and they've just gone through the process of completing the feasibility study, locking in off-take contracts, financing and construction of a 200,000 tonne lithium concentrate production facility in Western Australia. And essentially what we're doing at Sayona Mining is replicating the success that Altura have had building their Pilgangoora mine and applying that to the Ortier project in Canada. So it's all about generating shareholder value by replicating that success. 2 of our directors were also founding directors of Orocobre. So for a company of our size, we have a lot of experience and expertise in the lithium sector. I'm the CEO. I'm based in Brisbane, and our big focus in the last 6 months has been adding in-house technical capability to our Montreal-based team, and we recently hired Jonathan Gagné, who's a mining engineer. He came from Glencore. He's responsible for all our operations in Canada. And we hired a metallurgist, Jarrett Quinn, who came across from North American Lithium, and that's the only operating lithium concentrate facility in Quebec, in Canada, full stop. So we're pleased to be able to get someone with a little bit of in-country experience. And Jean-Pierre Laundry, he's joined us based in Roy-Noranda in close proximity to our project. He's a civil engineer and essentially has more than 17 years experience building lithium projects building projects in Quebec, and he'll be responsible for seeing through the engineering phase and the construction of the project. So Ortier is located about 500 kilometres northwest of Montreal. It's in close proximity to Val d'Or. It's a major mining district. Canada's largest gold mines, 22 kilometres from our project, the Malartic operation. We own 100% of our project, and it's been a very well-studied project. There's over 26,000 metres of drilling in our property. It's been the subject of a PEA, 2 pre-feasibility studies, and we're about 2 months away from finalising a definitive feasibility study. So our strategy at Ortier is in 2 stages. The first stage is to get the project into production as quickly as possible, selling concentrates and capitalising on the high price we're expecting for concentrates over the next sort of 5 to 7 years, just depending on how quickly the supply side response is. The fast-track permitting regime in Quebec means that we avoid going through a lengthy EIS process facilitated by the government. It's a process that we facilitate ourselves, which is enabling us to do this quickly. And it does cap our production at about 2,000 tonnes a day of ore, which is about the equivalent from this operation of 100,000 tonnes a year of 6% concentrate. So we'll be developing that as a simple open cut mining operation, conventional crush, grind and flotation circuit operating for about 17 years. In November 2017, we completed a pre-feasibility study, and to produce 100,000 tonnes a year of concentrate, we need a start-up capital expenditure of around $65 million, and the project will operate with an operating margin of around $300 a tonne, which generates an attractive annual cash flow on average over the life of the project of nearly $40 million, and that gives us a pre-tax NPV of around $227 million and an IRR of 56%. From the pre-feasibility study, we defined an ore reserve of just over 120,000 tonnes of contained lithium oxide, and that was from a total resource of about 186,000 tonnes. So since we published this ore reserve, we completed another drilling program on site, and we were able to upgrade the mineral resource from around 18 million tonnes to 20.46 million tonnes at 1.02%. So on completion of our DFS, we'll be in a position to announce a new expanded JORC ore reserve, and I'd be expecting to extend the mine life to over 20 years. So the deposit's really well understood within the main ore reserve itself. We have about 23,000 metres of drilling, 176 diamond holes, and the mineralisation itself is spodumene. It's quite a simple deposit. It's quite homogeneous. It's about 1.1 kilometres long. It averages about 35 metres in width, extends down to about 200 metres depth in this pit optimisation, and it's amenable to simple drill and blast truck shovel style operation. We will be leasing our mining fleet to keep our upfront capital costs as low as possible initially, and as part of our DFS, we're looking at all our geotechnical assumption, ore loss and ore dilution assumptions as part of the program to upgrade the reserve and extend the mine life, and hopefully reduce that stripping ratio from around 7 back to a number a little bit closer to 6. Processing is conventional. It's a 3-stage crushing circuit. We'll be grinding our ore to about a P80 of 180 microns, removing mica through flotation, and then producing a 6% spodumene concentrate. The 2,000 tonne a day of ore equates to roughly 700,000 tonnes a year of annual production, and giving us on average about 96,000 tonnes of concentrate over the life of mine. Water is a fairly sensitive issue in Quebec, so we'll be looking at doing dry tailings and stacking the tailings with our waste pile from the mine. We have excellent infrastructure in close proximity to our project. Val-d'Or's a major mining service centre, so there's plenty of skilled labour readily available. We won't have the need for mining camps and a lot of the infrastructure that goes with more remote projects. We have sealed roads within 5 kilometres of our project. They go down to 7 potential port options. We're 20 kilometres from a rail loop, which also gives us another option for getting our product to market. And probably most importantly, particularly for a spodumene processing facility, it's a very energy intensive process. We can get electricity for less than 5 cents a kilowatt hour, which is sourced from renewable energy sources. We're just in the process of completing our DFS. We hope to have that finalised in June, and that will then enable us to start our permitting process. That'll go for about 6 to 7 months, and in parallel with that process, we'll be looking at converting one of our MOUs that we have with the Chinese group for purchasing our concentrates, and turning that into a binding offtake contract that we can then use to facilitate the final financing for the project and the construction. One of the things that we've been studying in detail is evaluating our product in country. So at the moment we're contemplating selling our 6% concentrate into the Chinese market. We think that there's a very strong value proposition for converting that into either lithium carbonate or a lithium hydroxide, and capitalising on some of the natural advantages of Quebec, which is the very good infrastructure, very low energy costs, and we also have access to acid, which is a key ingredient in the conversion process. So for a capital investment of somewhere between $225 million and $240 million, we can significantly enhance the NPV of the project, particularly on the lithium hydroxide, where we get a pre-tax NPV up around $800 million. So we're in the process of doing a pilot plant at the moment. We drilled 5 tonnes of core. That's been conducted at the SGS Lakefield facility in Ontario. And once we produce concentrate from that facility, we'll be using that for testing it with customers, and also for producing lithium carbonate and lithium hydroxide, and that data will feed into a feasibility study on the Downstream project. So ultimately we would envisage a scenario of producing concentrates in around and selling concentrates in the first quarter 2020, and then about 3 years later converting that over to a lithium hydroxide facility. Pretty much just gone through that, so targeting first concentrate sales in 2020. And just as a final slide I like to show, I think that our company is significantly undervalued in both an absolute and a relative sense, and this is just a value curve that you see in the lithium space. We're capped at about $88 million. You can see the valuations of some of our development and production peers, which is very, very significant valuations, and a bit of a disparity between some of the early stage explorers, which seem to have very significant valuations. So I think that we're a very attractive investment proposition. So just to recap, we've got an advanced lithium project. We've essentially de-risked this project through the studies that we've completed and all the drilling, and we've got a DFS underway and nearing completion. We're executing a plan to get into production and cash flow as quickly as possible, and our base case valuation for the concentrates is very attractive. We look very attractive on a relative basis, and we've still got the valuating potential of the Downstream project. And as a final point, Quebec is a first world country. It's got excellent infrastructure and very low energy costs, and we've got a board and a team with a lot of experience and expertise in delivering these projects. Thank you very much.